How to buy BlackBerry stock. In the search for a form of investment that will give you a great return, investment bonds have become a really popular way of saving. Why is this? There are a range of factors to explain their success. A good point to start an explanation of the rapid growth of investment bonds is to pin down what this sort of investment is. In a nutshell, they are investment plans sold by a life insurance company or other financial services provider. Investors pay in a lump sum which is invested in one or more collective funds. They are potentially an excellent tax-efficient way of holding a range of investment funds in one location. One of the really good advantages is that they are professionally managed. They are usually designed to give long-term capital growth, yet can also be utilized to generate an income. It is evident that the global financial crisis is having a bearing on the investment bonds market. Despite the current challenges, providers can still find consumers who are seeking out safer investment options that may give them a great return. A notable aspect of the investment bond market is that the smallest investment is about £5,000. These types of bonds are regarded as medium to long-term investments, typically greater than 5 years. A further reason for the popularity of investment bonds is that they can be used as a means to reduce inheritance tax and personal tax. While it might be a fact that bonds are never going to be the most thrilling sector of investing, they still have a place in a lot of investment portfolios. They give more stable returns than those available from the stock market, so they're a good alternative for prudent investors or those whose portfolios are already risky enough. The drawback is that profits can be higher elsewhere, but an intelligent selection of bonds should still outperform cash in the longer term. To sum up, it is up to each individual investor to figure out the relevant facts about investment bonds to determine whether or not they are suitable. One should take into account the unpredictability of stocks and shares in recent years and the fact that prices can rise as well as go down. The amount of risk that you may expose yourself to is an all-important consideration for any investor. You have to choose a level of investment that you are comfortable with. It is therefore vitally important that you look at the available options before you reach a final decision. After all, it is the decisions that you make at this juncture that will determine what you get back later, so time and care should be set aside for looking for the best deal that you can get. It is hoped that this explanation of what an investment bonds is and what it can do for you will provide you with an insightful basis with which to come to the decisions that will have major implications for your future and financial well-being.